In today's video, I'm going to teach you how you can use ICT's power of 3 with a bit of a structural context and supply and demand mix and twist to really find the high probability ICT power of 3 trading setups. Now personally, I don't recommend trading the ICT power of 3 solely. It needs to be understood with the overall contextual understanding of what price is doing and what price is printing for you on the screen to react to and to really find those high probability ICT power of 3 setups to get involved with your trade plan. What I've got planned out for you in today's video has been life-changing for myself and hundreds of other funded members that have been created from my community called MMFunded using the methodology that I have created for my members. I'm a full-time 6-year funded trader. My trading system contains of top-down structural understanding of what price is doing, allowing me to find my higher time frame POIs to then start applying my lower time frame execution models, which consists of ICT's power of 3, sweep zones, targeting those relative structural weak high or weak low points. This methodology has taken me years to understand, put into action, to collect the necessary data to prove that it works, which fast forward 5 years later has become my full-time profession and also created hundreds of independent, consistent and profitable traders. Without further ado, let's hop into my PC. How's it going, everyone? This video is going to be about ICT's accumulation and distribution model, with a bit of a supply, demand, and contextual structural understanding of what price is doing, giving you confluence and helping you identify the really high probability ICT power of 3 setups to look for your short or your long entries. This is the sole biggest reason why traders cannot identify ICT's power of 3 is simply because they're just looking for accumulation, a sweep of that liquidity, displacement, fair value gap to go long. Now, looking for the schematic to play out in the market is simply not enough to confluence and find a high probable trade plan, which is why in today's video, I've formulated a much more high probability trade plan to identify the accumulation, distribution, and expansion model for you to get involved in price. Now remember, as per the videos that I've posted in the beginning of this ICT 2024 MMFunded mentorship, we spoke about structure, we've spoken about high probability institutional levels, we've spoken about the Asian liquidity model, and ultimately what this comes down to is looking for the accumulation, distribution, which is the sweep of that liquidity, and then the expansion with your entry confirmation, which would be your market structure shift, fair value gap entries to continue long, to continue targeting those relative weak structural high or low points. And without this overall contextual and structural understanding of what price is doing, you cannot have your high probability ICT power of 3, simply because the way the algorithm of price works does not follow simple accumulation, sweep of that liquidity, market structure shift to continue long from there. Because not every single setup will follow price like this. Now, the really high probability ICT power of 3 setups come in once you start to incorporate your structure and high probability institutional levels where price may pull back into to then continue targeting those weak highs, where we can start to incorporate ICT's power of 3 as our entry model to get involved of that institutional level to continue targeting those weak structural points. Now, I do realize that the way that ICT looks at accumulation and distribution is the daily candle, an accumulation, a sweep of that daily candle, the manipulation, which is the sweep of that liquidity and the sweep of the daily low, or it could also be the daily high, the displacement fair value gap, the pullback into that gap, to then continue with your expansion to continue targeting that daily candle weak high. Now, the way that I've approached the ICT power of 3 in my trading system is a little bit different to this, because then again, that's exactly what trading is. Trading is not just copying and pasting someone else's system. It's taking the knowledge that you've learned from mentorships, whether that's been ICT, other YouTube videos, other private mentorships that you've taken all of that knowledge, putting together your own ideas, your own understanding of how you perceive price, and formulating your own model out of that and determining what works for you in terms of catching a high win rate and also high risk to reward trades. And ultimately, trading also goes down
deeper than that. It goes all the way down to actually understanding the algorithm of price. Now, the way ICT perceives the algorithm of price is through liquidity sweeps and targeting that opposite side, buy side or sell side liquidity. Then obviously he's got a lot more detailed models to incorporate and formulate your trade plans. Now, the way that I perceive the market's algorithm and the overall background of how price moves to manipulate standard retail traders like me and like you to then ultimately moving price in the direction that it's already going to go, which in my eyes, price moves in the algorithm of structure, institutional levels, and liquidity sweeps to target those weak structural high or low points. Which is why I'm here on YouTube today to help you identify and learn the algorithm of how price moves, and also why I've transitioned my YouTube channel from e-commerce, short video platforms, affiliate marketing, drop shipping to trading full time. Because while I was busy with e-com and all those other things, my specialist skill has clicked with trading. So therefore, when I moved into trading full time after I finally nailed and found my methodology and system in the markets, I've transitioned my channel to trading full time because I'm not going to create content on business models such as e-com and affiliate marketing that I'm no longer doing. But with that being said, let's continue with one or two live examples of identifying your structural story and using ICT's power of 3 as your entry confirmation to continue following through the delivery of price. Let's first discuss what accumulation, manipulation, and distribution consists of. I've highlighted the 3 different steps in this model in 3 colorful boxes: red, green, and blue. Green being the accumulation. So ideally what you want to see is you want to see a range of relative equal highs and equal lows busy forming below or above an institutional level, which will make this institutional level a really good probability of price to sweep that accumulation, to mitigate further and liquidate further into that institutional level, to then look for your distribution entry confirmation, which is a market structure shift or a change of character with a displacement fair value gap entry to continue long off of that higher time frame institutional level. So take note of the way that I'm approaching this. We're not just having a look at simple accumulation, which is a range, a sweep of that range, the displacement fair value gap to go long in the middle of nowhere. It must be happening in a higher time frame POI, which is a point of interest, supply or demand zone, or institutional level zone. In this scenario over here, let's say we've got strong protected lows, weak exposed highs, price is busy forming accumulation with the range, but we sweep the upside, we then print that distribution with the market structure shift, fair value gap entry, and now, because we've swept the upside first and we've printed a short opportunity, is this going to be a high probability setup? No, because the expectational order flow and the directional bias of order flow is not to target these strong lows, but is to rather target these weak highs. So therefore, once you incorporate this model and understand now that we're forming an accumulation, which is a range, a sweep of that range, the displacement fair value gap to start with the distribution, this makes more sense and is immediately higher probability because the expectational order flow is to continue targeting these weak highs and respect these strong protected lows. I quickly want to take you through a live example that played out on XAU USD Gold on Thursday this week. Okay, first thing I always do when hopping onto a chart, without looking at supply demand, without looking at accumulation distribution, without looking to go short or long or whatever, my first and foremost, and this has really become a part of my day-to-day life routine, not just my trading routine, because, well, this is my full-time profession, is I hop onto the daily time frame and I go over my 3 structure types, which is a methodology that I've created for my private members to immediately get a crystal clear understanding of exactly where you lie in price, that higher time frame contextual understanding, which will allow you to execute on the lower time frames with full confidence. Okay, so immediately I can see on the daily time frame, we have our weekly strong lows, weekly break of structure, weekly weak high after that weekly pullback started when the daily swing structure shifted bearish. We had the most recent daily break of structure and that daily break of structure to the downside, making this a daily strong high, which then signaled the start of the weekly pullback. So although the daily has been bearish, extremely bearish for the past 3, 4, 5 months, I am still overall bullish on gold because I understand where the money lies. I understand the structure of the market, where expectational order flow is meant to go. And as we mitigated the extreme weekly institutional level, we printed that daily swing break of structure to the upside, which now confirms that overall weekly order flow is going to continue and confirm targeting these weak exposed highs. Okay, so I know this is not really relative yet to the accumulation, manipulation, and distribution model, but it will start to make sense as we go through this video. After every single break of structure price makes, whether that's on the weekly, the daily, the 4 hour, the 1 hour, the 50 minute, the 1 minute, price will always incur some kind of pullback into that previous structural range, whether that again is a liquidity sweep, mitigation of a fair value gap, the accumulation, manipulation, and distribution model, to then continue in the direction that it's going to go, to continue targeting those weak structural points. All right, so immediately I can see we've now had that daily break of structure to the upside. So after that daily break of structure with this candle body closure, what can we expect from price? Is for a bit of a pullback to happen, discount of this entire range. So over here, we have a demand zone or an institutional level at the equilibrium of this range, and we have a demand in the discount and at the real extreme of this entire swing range. We have our daily strong low, daily weak high. So the expectation is now for a bit of a pullback to then continue targeting those daily weak highs, daily break of structure, daily pullback, whether that's into demand, to then continue targeting those weekly weak highs. And I've been discussing this with my members for the past couple of months now, really since March, is that I want to see price. I think we first discussed price way back after this weekly break of structure. We wanted to see price really react to these supplies to cater for a bit of a weekly pullback, creating more triple top liquidity and sell side liquidity to eventually target those weekly weak highs and ultimately create record highs at 2080 on gold, at least within the next year or two. Okay, so now that we understand the weekly and the daily, that we're in the weekly pullback phase, we can already think to ourselves on the lower time frame. We can look to get short to continue riding the daily pullback, whether that's into further areas of demand, or if the lower time frame gives confirmation with that internal shift to the upside, to go long and continue targeting those daily weak highs, which would ultimately be higher time frame pro trend. Using the power of 30, from the weekly we go to the daily, from the daily we go to the 4 hour time frame. Okay, so immediately after that previous daily break of structure, if we have a look at the 4 hour structure, 4 hour break of structure, 4 hour pullback, 4 hour strong protected lows, internal shift to the upside, internal pullback into demand to continue targeting those weak highs. And again, immediately, if you look off the bat, let me mark this out for you. Accumulation. Okay, let's just put that in a green box. Manipulation, the sweep of that range. Let's put that in our red box. And then the distribution with the sweep of that accumulation, market structure shift, pullback into fair value gap to continue long, to continue targeting those relative weak structural high points. Okay, so this then becomes our distribution. So immediately, without even looking at the lower time frames, once you start to see your structural story of the market, it's going to help you so much more in identifying the high probability ICT power of 3. Over here, we could have got involved here. We could have got involved after these fractal breaks. Again, over here is a continuation to continue targeting those weak highs. Okay, mitigation of old supply, internal shift, internal pullback into supply to now cater for what? Well, after every break of structure, we're due for a bit of a pullback. We then started that 4 hour pullback, which again, if we have a look, we had that internal change of character as demand failed, putting supply in control. Take a look at this. Accumulation, really just a range over the last 4 days, about 2-3 weeks ago. sweep of that range into the higher time frame POI, market structure shift, fair value gap, pull back into that gap to continue short, to continue targeting those structural weak internal lows. But now understanding that yes, this is swing counter trend, but after the 4-hour break of structure, we are due for a bit of a pullback into more extreme areas of demand before then looking to go long to continue targeting those weak highs. Okay. So immediately again off these two examples over here, hopefully you've already started to see, once you understand your 3 structure types on the charts, you will immediately start to identify the really high probability accumulation, manipulation, and distribution models. I'll show you an example of a short trade that we took on MMFunded this week. I quickly just want to update you on structure. So after that 4-hour break of structure, we had new strong protected lows. Those strong protected lows then broke to the downside. Well, why? Because after the daily break of structure to the upside, we are due now for a bit of a daily pullback into daily demand before continuing to target those daily weak highs. How do we identify the start of the daily pullback? Well, come back to what I said. From the weekly, we go to the daily because the daily is the weekly internal. From the daily, we go to the 4-hour because the 4-hour is the daily internal. So once that 4-hour swing structure shifts the opposite direction after the daily break of structure, that confirms we're now going to start a bit of that daily pullback. So yes, gold has currently just had that 4-hour swing break. A ton of traders are now looking to go short, maybe ride price to levels of 1750, 1780, 1800, whatever it may be. But ultimately, my overall bias on XAU USD is just to incur a bit of a daily pullback, then looking for confirmation on the lower time frame to continue targeting those 4-hour week, to continue targeting those daily weak highs. So in this scenario, although our 4-hour highs are strong, this is also our daily weak highs. Okay, so most recently, after the 4-hour break of structure, we then started a bit of a 4-hour pullback. We mitigated 4-hour supply, and this is where I started to look for my accumulation, manipulation, and distribution model, but with the higher time frame understanding of what structure is printing for me. Understanding that price's expectation is to target these weak lows. So instead of looking for a accumulation here, that manipulation, that displacement fair value gap to go long, understanding that this is counter trend because the expectation is to incorporate a bit of a daily pullback, we ideally want to look for that pullback, then get involved on accumulation, manipulation, distribution with the fair value gap to rather continue short to target these weak lows. And this is the shift that ultimately took me, I don't know how I can emphasize on this, years to get on the right side of the market. Is once you understand that expectational order flow, your possibilities become endless with this game, and it will allow you to incorporate all sorts of systems, whether that's support resistance, whether that's EMAs, VWAP, Lux Algo, buy and sell signals. Understanding and incorporating that with your 3 structure types will always keep you on the right side of the market. Okay, so let's go over a live example that we took this week. So from the 4-hour, we hop onto the M15, which is our 4-hour internal time frame. Okay, so price had that 4-hour break of structure. How do we identify the start of that 4-hour pullback? Well, we look at our M15. M15 break, M15 pullback into supply, continuing to target those weak lows. New M15 break, M15 pullback. We then broke M15 structure to the upside, which signaled, okay, we've now started that 4-hour pullback. We can expect a bit of a pullback into 4-hour supply, whether that's here, 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 or further up to continue targeting those weak lows. Okay, but you don't need to worry or stress about and try and anticipate where price is going to pull back to. If price pulls back into a supply, gives you an entry confirmation model, that's your confirm that price is now going to target those weak lows. So my confirmation on this trade was accumulation, manipulation, distribution with the fair value gap entry to continue targeting those M15 weak lows. Okay, so let's quickly go over this. Already on the M15, what I wanted to see was a mitigation of the 50% of this 4-hour zone. Because it's such a large 4-hour zone, I always like to use 50% just to refine down and look for those tighter R trades. Okay, so what I wanted to see was mitigation of the 50%. Just a simple reaction. And ideally as a plus, if it ranges, then what you want to see is a sweep of that high, which acts as a sweep zone. I sometimes like to call that a fake change of character. Then print the true displacement with the market structure shift and fair value gap as your entry confirmation. Okay, so we had this gap form over here. My stop was just above that gap, as we had mitigation of this higher time frame institutional POI, a bit of a range, sweep of that range, which is our manipulation, distribution, which was the market structure shift with a big displacement and fair value gap, which was my entry confirmation to then take shorts of these POIs to target those weak lows for a 1 to 8 risk to reward. So again, take note of how I'm not looking for accumulation because price was busy stuck in this M15 swing range, sweep of this range, market structure shift, displacement fair value gap, to rather go long is because this is at the moment completely counter trend. It's against your expectation, and this is where you need to learn how to start managing your expectations in the market. Well, although longs could have been valid here, but understanding we're not going to look to ride price all the way up to areas such as here or here, because this would be counter trend trading, understanding you just trading a bit of the swing pullback. Because we did indeed have the M15 break, M15 pullback, M15 strong high, M15 weak low. Okay, price ranged awfully in this M15's range, making this our valid accumulation. Let's just again set that at green. Manipulation, which is the sweep of that range. Let's make that red. Okay. After that sweep, we printed a large displacement fair value gap, which that gap would have been over here. 100% valid. Or let's just quickly make that blue. %, valid for your long entry to ride a bit of that pullback, whether you want to target the nearest M15 supply or the 4-hour POI to then start looking for your accumulation, your manipulation and distribution model to then go short, rather keeping on the right pro-trend side of the market. So 100% valid for longs, but understanding your expectation and what order flow is doing. This long is not going to be good probability if you're going to be targeting areas way up here, or the premium of the swing range is because that's against the expectation of where price needs to go. Okay, so let's go over 1 or 2 examples on EU, and also if you're struggling to spot the accumulation, manipulation, and distribution, a much more easier and mechanical way to identify it by eliminating all of the noise in the market, as really accumulation, manipulation, and distribution happens everywhere. Okay? Accumulation, manipulation, distribution, displacement, fair value gap to continue long. Then same thing over here. Slight accumulation, manipulation, distribution, pull back into fair value gaps to continue short. Okay? Accumulation, manipulation, distribution, fair value gap displacement to continue long. So this happens ultimately everywhere you look in the market. I mean, I can see it everywhere here. Okay? Accumulation, manipulation, sweep of that low, distribution, fair value gap to continue long. And then same thing over here. Accumulation, manipulation, displacement, fair value gap to then fail to continue targeting those weak lows. So this would have been a good example where if you understood your structure story, this would have been a low probability setup to go long because the expectation is to target these weak lows. Okay, same thing over here. Accumulation, sweep, manipulation into the higher time frame, POI, distribution, market structure shift, fair value gap, to continue short to target those weak lows. So again, once you understand your structure story of the market, you start to naturally see it much better. Okay, So let's go over a long example of longs that I took on EU. This was a while back, but I know we took longs right over here. Okay. But I know we caught a 1 to 27 risk to reward. I still streamed this live with the community. We entered on a 1-minute confirmation to continue targeting those, I think it was those 4-hour weak highs. We had like a 1 to 26 risk to reward. Yeah, we targeted this 4-hour POI. We had some kind of 1 to 26. It was a massive trade that we caught on live stream about a week and a half back. But again, it was the model of accumulation, manipulation, and distribution. Okay, so if we have a look at the 4-hour time frame, just to get some context on EU, and this is exactly what I discussed with my members, is we've had, even if we look at the daily, just to get more context on the 4-hour, we've had our daily break of structure. So what can we expect is the start of that daily pullback. And we identify the start of that daily pullback once the 4-hour swing structure shifts to the upside, which we had this shift over here. You'll see it a lot more clearly in the 4-hour now. That 4-hour pullback into demand to continue targeting those weak highs. So already understanding the daily, looking for longs is going to be looking for riding that daily pullback. We confirm that with the 4-hour. The 4-hour trend is bullish, so we were pro trend on the 4-hour, which was 100% valid because the 4-hour is catering for that daily pullback, and we use the M15 as our confirmation model to confirm to target those weak highs. And in that M15 structure, we use accumulation, distribution, and manipulation model to execute our trade. Okay, so yeah, on the 4-hour time frame, there was our 4-hour break of structure, most recent strong high, most recent strong low that took out the previous strong high, 4-hour pullback into demand, internal shift, which again over here, accumulation, manipulation, distribution, market structure shift, pullback into fair value gap to continue long to target those weak highs. Okay, 4-hour pullback started, and as we got to this POI, we formed liquidity, accumulation, manipulation, the sweep of this liquidity, the double bottoms into this higher time frame POI, market structure shift, pullback into fair value gap on the lower time frame to continue targeting those weak highs. Okay, so this was ultimately where we got involved on, I think it was about 2 weeks ago on EURUSD when we live streamed that. The stream is somewhere up in the Discord. Yeah, right over here. Okay, so we mitigated the higher time frame 4-hour POI. So what I was looking for was clear range or just clear liquidity of basic equal highs and equal lows forming for this POI, for price to sweep that POI within the distribution model, because this was our, if we label this more formally, okay, accumulation, manipulation, distribution model. After that, displacement fair value gap. Let's just move that a little bit aside. Displacement fair value gap, distribution, which then pulled back into this area of demand to continue targeting those weak M15 highs, which then confirmed the M15 is now shifted bullish, which is confirmation that this 4-hour POI is now going to hold and continue targeting those weak highs. So then again, later on to the next day, I took a continuation entry on this accumulation, manipulation, distribution model that next morning on live stream with the community, and we had the same thing. We had a nice range form of relative equal highs. We also had opportunity for shorts. We had equal highs, sweep of those highs, distribution, displacement fair value gap, to go short to ride a bit of that M15 pullback, as after the M15 break, we do for an M15 pullback. And then same thing, relative equal lows. The only reason I didn't look for shorts was because understanding it was counter trend, I'm looking for longs to rather trade pro trend, okay? So we had also relative equal lows. Manipulation, sweep of those lows. On the 1-minute time frame, we had a sweep of those relative equal lows, which was also Asian liquidity, which was the Asian model. And that will also add as a really good probability to your accumulation, distribution, and manipulation model, is if that Asian liquidity is sitting above or below that higher time frame POI. Is you want to see that Asian range, which is your accumulation. After that higher time frame Asian sweep, you can then again reuse the accumulation, manipulation, and distribution model. As it's fractal, it happens on every time frame, everywhere in the market. So as price is now swept, so as now price is in that violation or manipulation phase of the M15 or the higher time frame accumulation, we can use the same thing on the 1 minute as confirmation that the M15 manipulation phase is going to now distribute. So we look for, as price mitigates this POI, relative equal lows, a bit of a range, a sweep of that range. Then we want to see that displacement fair value gap, which in the scenario on the 1 minute, we entered on this immediate gap over here. Okay, we also had a volume imbalance gap, tiny one form over here, but we entered on the 50% of this candle just to make sure we get tagged in, stop below that low, to continue targeting those M15 week highs, understanding our structural context. Okay, so we then had a tap in of that limit, understanding now price is busy entering that distribution phase because we've had the manipulation on the M15, the 1 minute manipulation, which is the confirmation of the M15 manipulation that price is now going to distribute to target those relative weak structural high points. Okay, and this is how that trade played out. Okay, again, M15 internal break, M15 pullback to respect demand to continue targeting those weak highs. M15 break, M15 pullback to continue targeting those weak highs. And there we go. That was the distribution of that model that played out. Okay, so ultimately what I want you to see over here, let's just quickly remove that and these Koki pins. If I come back to the M15. Okay, accumulation, manipulation on the 1 minute time frame, accumulation, manipulation, displacement fair value gap to go long, which is confirmation that this overall higher time frame manipulation is now going to distribute, which is the entry confirmation that we took on the stream with the members to target those weak highs. So what I'm getting down to is accumulation, manipulation, and distribution happens everywhere in the market. It's going to be too noisy if you're looking for it everywhere. Over here was accumulation, manipulation, distribution into fair value gap to continue short, riding that pullback. Okay, and you'll see the same thing will happen over here. Most likely a bit of a range, manipulation, displacement fair value gap to cater for a bit of a pullback. Let's see what plays out. A bit of a range, sweep of that range, displacement fair value gap, to continue short, catering for a bit of an M15 pullback, which we can expect then for price to pull back into demand levels, accumulation, manipulation, distribution to then continue long. Okay, so in this scenario, we just mitigated more recent demand, and we most likely on a lower time frame had accumulation, also equal lows over here, sweep of that, which was manipulation, then market structure shift, displacement, fair value gap, which is confirmation that the distribution is now going to start to continue targeting those weak highs. So again, I want you to understand how we're not looking for shorts here simply because we understand that's not the expectation of order flow. So accumulation, manipulation, and the distribution, or ICT's power of 3, needs to be paired up with the overall contextual understanding of price. Now, if you guys want to go and learn exactly how to mark out and understand your structural story of the market in a very mechanical and rule-based system that will help you understand this very quickly, I will leave a link down below to my full methodology mentorship, which is my Discord community, where there's about 100 hours worth of content and 200 hours of webinars, my live streams with my community members going into session every single morning, and I actually live stream with you the live market structure, the relative weak highs, weak lows, the high probability POIs that we can look for, ICT's power of 3, entry confirmations to continue targeting those weak highs as our trade plan for the day. So it's not just a pre-recorded course, it's also a full day-to-day live stream mentorship so that you can see that consistency every single morning, which is ultimately the key that will make you a consistent, independent, and profitable trader. And not just profitable, but also give you a much deeper understanding, as trading goes deeper than that, a deeper understanding into actually understanding the algorithm of price. You're also welcome to send me a message on Instagram. I'll leave my link down below to Instagram, where I will hop onto a live stream with you or send you a voice note if you have any questions on these videos. If you want to get to know me more personally, ask me about my community, ask about the pro funded traders that I've created in my community, please don't be afraid to send me a message on Instagram. But without further ado, guys, I will see you in the next ICT 2024 mentorship video coming this week. Also going to be a really valuable one. So I recommend stay subscribed to this channel so that you will get a notification as soon as I post these updated course videos. We're also going to start a live stream show on YouTube where I will hop onto the charts and do my daily markup and trade plan and show you my morning routine on live stream with guests as well. It's going to become an entire podcast. I'm going to push my luck and try and invite some really big name traders in the world as a guest on the show. So yeah, there's going to be tons of awesome value and plans coming for you guys on this YouTube channel. So make sure to stay subscribed. And also, if you're keen to join my community and learn this methodology, click on the link below and I'll see you on the inside.